Today is the 13th of September, 2014, and this is episode 141. This program is intended for informational and educational purposes only. Cryptocurrency is new, highly experimental, and we're not experts, just obsessed companions walking the road towards a more peer-to-peer future.
Welcome to Let's Talk Bitcoin. We're going to make this a fun show. We're basically going to do a news roundup and just talk about some of the things that have been happening recently in the world of cryptocurrency. And it's always an interesting time when we do that. Ready to go?
Yeah.
Cool. So, okay, the first thing that we wanted to talk about today was, man, altcoins are really just taking a hit lately. I mean, everybody's kind of been talking about the price of Bitcoin being down around, $500 or below. And we don't like to focus too specifically on the numbers on that and analyze them and what does it mean? But Bitcoin has been trading lower than it has if you go back 6 months. And altcoins have been also trading a lot lower than they had been, particularly some of the really popular ones like Litecoin and Dogecoin, right?
It's been true for a very long time that the altcoin market tends to mirror in close proximity or to be elastically connected to the price of Bitcoin. So it is expected, I guess, for altcoins to decline when Bitcoin declines. But I think what we've seen this time is whereas Bitcoin declined and has been a bit bumpy lately, it is currently quite a bit lower than it's been for a while. It seems that altcoins magnified, I guess, that effect and declined even harder. And some of them dropping dramatically and disrupting, if you like, the ranking of coins, and some of the others dropping, but not so dramatically. Now, if you're interested in looking up the numbers, probably one of the most useful sites for that is coinmarketcap.com, which shows the various coins, their relative ranking, if you like, in market capitalization based on the current exchange rate to the dollar vis-a-vis each other. So Bitcoin is currently number one with $6.3 billion in market capitalization. And market capitalization, to explain that just means multiplying the current US dollar price of a coin times the number of coins that are in circulation. Litecoin is at 154 million. The ranking goes Ripple, BitShares, NXT, Peercoin, and Dogecoin. So just to look at the first, might as well cover the next three: Darkcoin, Namecoin, MadeSafeCoin.
It's really interesting that out of the top four, right, two of those are basically crypto platforms like BitShares and NXT.
Well, you might even consider Ripple to be a platform too. So three of those are platforms.
How is Ripple so high? I mean, for all the scandal that's been happening.
I don't know how to answer that question.
I'm scratching my head. I don't know either.
I think it's not important to necessarily focus on the price itself, because really the market capitalization and with the price volatility that's going on, a lot of these coins don't really have enough liquidity to be accurately priced. But nevertheless, I think the relative movement is interesting to look.
I wonder if market capitalization is even really a good, it's like, is IQ a good measure of intelligence? It's a measure, but it may not be a good one, right? Because what's the trading volume on each of these coins? Would there be any chance that someone actually wants to buy a significant amount of any of these coins? Of course, if they did start buying or somebody started selling, then the price would change.
Right. Well, let's answer that question. If you look at the trading volume for the last 24 hours, Viacoin jumps up from 19th position to 4th. Monero jumps into the top 10 rankings at 6th. And so you have a couple of interesting other coins jumping in there in the mix, and a couple of them disappear. Dogecoin stays pretty much where it was. So there's some interesting things going on with this ranking. If you look at the top 10, in fact, Namecoin and MadeSafeCoin are 9 and 10 by market capitalization, which means that 5 of the top 10, or 50% of them, are platforms.
Really telling. So, I mean, I know you've said in the past, Andreas, that there's this idea that when there's a new technology that comes out, one of the steps along the way is fragmentation. And you think that altcoins were kind of representing that. And then there's the collapse back together. I'm totally butchering what you said, but could you just go over that again? Do you think this is kind of like the next step in the evolution of cryptocurrency?
What's interesting is that when a new technology emerges, in the very beginning, you're going to have experimentation, because when people understand that something like the blockchain is inherently useful, they may not necessarily agree with the parameters of the first implementation and then try their own alternative. And so you have experimentation, which leads to fragmentation of the market. And it takes until that technology reaches a level of some stability and maturity in the market before you start seeing consolidation and finally standardization. It's interesting to look at a parallel here, which is the internet and some of the underlying networking technologies such as Ethernet. Today, the vast majority of data center networking and local area networking, and by vast majority, I'm thinking probably in the 99.9%, is Ethernet. It's not the same Ethernet as it was back in the mid 80s or early 90s, but it's still called Ethernet. It's very similar in many ways. And the overwhelmingly huge majority of traffic that is between networks, routed traffic, is TCP/IP internet traffic. But it wasn't always like that. I mean, people forget that when Ethernet first came out, it was competing fiercely against Token Ring, Banyan Vines, and probably butchering it, I can't even remember. There was a bunch of others, and then you had various intermediary protocols that in some ways looked like a layer 2 protocol, in some ways looked like a layer 3 protocol. For example, asynchronous transfer mode, or ATM, which was competing to be the backbone for telecom networks, and SDH Sonnet, which was a structured fiber network, and ISDN, and X25, and all of these other protocols were competing in the early days to be the variant of interconnecting networks. And all of those are pretty much eclipsed nowadays. There's probably still X25 networks out there. There's probably still ISDN. I don't think there's any token ring. I'd be surprised. You might find it in some.
Yeah, there is ISDN. It's on the way out. It's used for voiceover sometimes to connect.
Right.
And it's just poor quality. It's just a dated kind of technology.
Yeah, antediluvian networks where you have X25 maybe. I recently found out that the interconnect for air traffic control is using teletype, wow, which is very interesting. So all technologies never completely die; they just wither but you can still find them in pockets. But here's the point: before Ethernet became dominant and before TCP/IP became dominant, they both had to compete against a broad variety. And at some point, there were a lot of competing protocols for both of those, for layer 2 and layer 3. Nowadays, they're dominant. There's no question about which protocol you should use for layer 3 or layer 2. Those are pretty much decided questions, at least for the current evolution of technology. So I think the same thing is happening with currencies, with digital currencies, decentralized digital currencies based on the blockchain technology. We're still in the phase where we have massive experimentation, and that leads to fragmentation. Eventually, once technologies mature, you'd expect things to coalesce a bit, to consolidate, and you'll see efforts at standardization. You'll see efforts at optimization, because at some point, there are more benefits to using the dominant protocol and standardizing on that to avoid interoperability and compatibility problems. But for now, we live in the golden age of experimentation in cryptocurrencies, and there's this beautiful kind of cauldron of activity and innovation going on.
The question that remains, I guess, is, are most of these altcoins going to go the way of these dated technologies? Are they going to go the way of Betamax or whatever? Are they going to be obsolete? And I guess if you believed in them, then you'd be buying them now because they're cheap relative to what they have been. But it doesn't seem like a lot of people are doing that.
I think it really depends on the coin. I mean, some of these coins may survive. They may find a unique niche where they're uniquely suited to a particular application or a particular community or a particular function. And that allows them to thrive alongside Bitcoin in synergy with Bitcoin. Bitcoin has obviously achieved a certain degree of market acceptance, which due to its size, it's unlikely to be completely displaced. But other altcoins may coexist with Bitcoin and explore a particular niche market. The vast majority.
And when I said altcoins before, I was really thinking of like some of the altcoins that are just straight up altcoins, not crypto platforms, have basically other functions related to the blockchain other than just being kind of a copy of Bitcoin.
Well, I mean, even those may have particular niches and features that are unique. For example, one of the interesting ones, I think, is the whole group of coins that are focused on anonymity. And we're going to be talking a bit about the explosion of alts in that particular area. Coins focused on anonymity are obviously a particular niche. And if there's a function that Bitcoin can't do or isn't doing for whatever reason, coins in that niche may well thrive independently of Bitcoin for that particular application, even if they don't have a platform.
I feel like people have been so burned by just the amount of altcoins out there that turned out to be scams or trying to kind of exploit the community or were just kind of being promoted to make money. I mean, to be fair, as long as there's an economic incentive for altcoins to be created, as long as people can basically make money by creating altcoins, they will, they're not going to go away. But it seems like people have just kind of been burned so many times by altcoins that there's a lot of skepticism out there. And maybe that prevents people from seeing some unique or beneficial qualities that certain altcoins do have.
Yeah, I think that's certainly true. Right now, CoinMarketCap is listing 471 currencies.
Wow.
Last time I looked, it was 450 something.
And that's just the top 470. I'm sure there's more out there.
there are more out there that we've never heard of. Yeah, I think it's going to be true for a very long time and perhaps permanently that the vast majority of altcoins will be not particularly interesting. They won't offer any massively differentiating features. There'll be a Me Too attempt. And in many cases, they're going to be essentially scam coins, pump and dump coins. But that doesn't mean that all of them are. There may be a few exceptions. And I can't say which ones those are. I don't know, really. I have a few that I'm interested in. You never know. I think what's more important here is the level of activity. As long as people create new things because they believe that there's a reason to differentiate from Bitcoin, that will allow us to experiment. And, if the only lesson we're learning is beware of scam coins, that's a valuable lesson too.
Yeah, it is. Especially when in the realm of anonymity. I mean, especially in that area, there's a demand for it. People want to be able to use cryptocurrency anonymously to preserve their financial privacy. There have been maybe some good faith attempts to provide that to people, but also some that are just really not providing that, but trying to kind of take advantage of people's hunger for it.
Yeah, exactly. The anonymity niche is a very specific niche, and it's easy to differentiate there and to explain to people exactly how you're differentiating. It's the most obvious application of cryptocurrencies that is not easily fulfilled by Bitcoin at the moment. But again, look at some of the other coins out there and how they've been faring. It's really quite shocking how quickly a coin might rise to a high level of market capitalization and then very quickly break and lose value. I'm looking at Dogecoin here, for example. It reached a market capitalization exceeding $90 million. And that was in mid-February. And now we're looking at September. And the market capitalization is, 12 million?
That's a pretty drastic difference. I mean, I remember us talking last December when Bitcoin was up around $1,200, trading at its all-time high, about the rally in altcoins. And it seemed like there were lots of altcoins that were just rallying kind of for reasons that seemed a little bit elusive. Like, perhaps people were just thinking, oh, well, a Bitcoin is too expensive. I can't afford that. I think I'll buy some X coin instead, whichever coin they wanted. So all these altcoins are rallying. Now we're seeing kind of the opposite happen. They're being hit really hard when Bitcoin's down a little bit. So are they just kind of expressing these extremes of what's going on with Bitcoin?
Well, there seem to be two components to that. One is that all altcoins essentially elastically are connected to the Bitcoin price. So, if Bitcoin goes down by 50%, take Dogecoin, for example, is down by 80%. Well, some of that, if not most of that, is just a decline of the overall market with Bitcoin leading and Dogecoin following. And some of that is a component of Dogecoin's own drop in popularity. And so you can essentially remove one of the factors if you took out the relative difference in Bitcoin's price from the Dogecoin movement, and then looked at the excess movement, if you like, of Dogecoin. Tor Demeester has done a really nice analysis. He's a young analyst who works in financial analysis and looks at the overall market. And one of the things that I found very interesting was his view of the altcoins as essentially an overflow system, where when the price of Bitcoin goes up and Bitcoin becomes too expensive in the minds of many investors or buyers, they flow into the altcoins. And then if the price of Bitcoin declines, then you see this outflow from the altcoins. So essentially you have this lagging following of the alternative currencies vis-a-vis the price of Bitcoin. I think that theory seems to apply quite well, and the market evidence seems to follow that theory quite nicely. And then you can remove that factor from the overall movement.
I've seen his analysis, and maybe you would know better than I would, but I'm sure that happens in other sectors, like with tech stocks or whatever. Google or Apple is too expensive, so I'll buy this other company, and perhaps that'll give me that meteoric rise that I'm looking for.
Yeah, well, in other markets, the situation is rather dire, because today there's this hunt for yield, and there is no yield left anywhere. Everything is inflated. Bubbles have inflated everywhere. Too much money poured into an economy with not enough productivity. So for mainstream investors, you've seen this exodus into cash, because most of the other investments are already at all-time highs, far exceeding, the underpinnings in terms of productivity, price earnings ratios, and all of those things that you would expect. The fundamentals are not there, and you've got these giant inflated bubbles. The one interesting thing about the cryptocurrency market is that there's still a lot of possibility in it from the perspective of an investor, but it's got such high volatility that it takes a very strong stomach or a very diversified portfolio to be in it with some degree of safety and prudence.
Couldn't you say the same almost? I agree that the Bitcoin sector has a lot of potential, especially in the minds of investors, but I don't know. A lot of these Bitcoin companies are going to fail. The ones that are getting funding now and have been getting funding over the past year or so.
Well, 90% of them are going to fail. If we look at, the statistics in the broader economy, 9 out of 10 startups fail. Now, in the Bitcoin space, it's probably going to be 95 out of 100, or even potentially 99 out of 100. The good news is that's investors risking their money in high-risk ventures where they need to be diversified. And the community as a whole benefits, because even if 95 of these companies out of 100 fail, they still explore 95 different areas of the market. And if the only lesson they teach us is there's no market there, that's still a very valuable lesson. And they may learn some other lessons along the way that will help other companies thrive later. This is all great for the market as a whole, all of this investment, even if the individual companies fail. You have to expect, in an area of technology that is so new, that the rate of failure of startups is going to be much higher, especially when you have a lot of unscrupulous actors, which unfortunately we do have in this space.
And everything you just said could also apply to altcoins, in relation to Bitcoin.
Absolutely, yeah. I can look at altcoins and watch, 999 out of 1,000 altcoins fail and still think that the altcoin market has something unique to offer, and that is a giant field of experimentation. And you can't possibly, at least in my mind, you can't exclude the possibility that out of that boiling cauldron of innovation, something unique will pop up that will end up becoming a big market.
This episode is brought to you by CryptoKit.com. The magic word for this episode is Ultra. That's ULTRA. Ultra. You've got until the 17th of September to visit letstalkbitcoin.com and enter the magic word for your share of the LTB coin listener rewards. Let's get back to Stephanie and Andreas.
So this is a very interesting story, and I like to say, first of all, that I have no answers here, but a lot of questions have been raised, and I think it's very interesting. There is a big, drawn-out fight going on between two opposing communities, together with just never-ending accusations of scams and pump and dumps and trolling and fraud and all kinds of things from both sides. I hate to do the he said, she said kind of juxtaposition journalism. I think it's interesting to look into some of the things that people have supposedly revealed in this space. I would like to learn more, but I have not had any firsthand research of this topic. Perhaps it might be a good topic to discuss with a guest further on. Let's start with the beginning. So cryptonote. Cryptonote is a altcoin platform, if you like, or altcoin reference, which implements anonymity features. So cryptonote came out with a white paper and then a reference implementation. Cryptonote itself is designed to reset its blockchain at regular intervals so that it's not in itself useful, and instead for other coins to be forked off Cryptonote. So Cryptonote is essentially implementing the reference implementation and test network, and then other coins with different names are forked off of Cryptonote. Cryptonote itself seems to be a relatively independent build of the same principles as Bitcoin. So it's a blockchain currency, but it's not based on the Bitcoin source code. And it implements some interesting anonymity features, including ring join based payments by default. Ring join is if you know what coin join is, it's a similar type of anonymization. The Cryptonote technology and the software behind it have been reviewed by some very, very smart cryptographers. Probably leading among those is Gregory Maxwell, who's one of the core developers. He's a freaking genius when it comes to cryptography. He's the inventor of CoinJoin and a bunch of other very important developments in cryptocurrencies. You know, I have a lot of respect for Greg's experience and skills in this space, and he's done some work on Cryptonote and given it kind of the nod of approval purely in terms of the technology. Now, from Cryptonote, a whole bunch of alternative coins were forked. The first one was Bytecoin in, I believe, November of 2013, and Bytecoin, BYTECOIN. First of all, a quick note there. There was another Bytecoin. And that other Bytecoin was developed, and I believe, the other Bytecoin was currency short code BTE, and the new Bytecoin is currency short code BCN. They're very different.
Jeez, this is so confusing.
It's just, it's a name overlap. The old Bytecoin had nothing to do with any of this. But basically, we've got a clone of Cryptonote called Bytecoin BCN. And that's one of the first altcoins that was developed, or it was the first fork of Cryptonote. Since then, 8 other forks have happened, including Monero, which is also very well known and is now ranking with the highest capitalization among the Cryptonote children. Let's call them all Cryptonote children.
So these coins have baked into the protocol some privacy features, which is what people have been crying out for with Bitcoin for a long time. I think a lot of people want that. Has that been vetted? Like, I know it's been vetted, but like, what were the results? Like, is this actually private, anonymous? Like, is this really kind of solving that problem?
Yeah, so Greg Maxwell, who's very well known in the space, and a few others have looked at this and said that it is solid cryptography. It's well implemented, and
but I know that CoinJoin has like an issue with it, right? Like, it wasn't really anonymous. There was some research that got published on that, I think by Christoph Atlas. Let me look that up.
Well, Christoph actually did a review of not CoinJoin the protocol, but blockchain's implementation of CoinJoin, blockchain the company. Within the blockchain wallet as an implementation of CoinJoin. And Christoph did a review of that, and he discovered that there was that you could derive statistical correlation between outputs depending on the number of rounds, and with some effort by statistical analysis, you can derive correlation between outputs. Now, that's for the specific implementation. This is ring join. CoinJoin itself, doesn't, you can implement it a number of different ways, and it provides pretty strong anonymity, not complete anonymity, because you can always figure out statistically what outputs, but you don't have very high accuracy or correlation. This uses ring join, which is slightly different, but also a very strong anonymity tool. And the technology is solid. People who've looked at it said, cryptonote, great anonymity features, solid technology.
Okay.
The problem isn't with it. So here comes the scandal. If I can call it that.
Yes, please.
So on August 15th, a poster on Bitcoin Talk wrote a very long and detailed post which had the results of some research, I should say, that this user had done into the origins of cryptonote as well as Bitcoin. Now, one of the interesting things about cryptonote is that the team behind it is itself anonymous. There's a whole bunch of names listed on the website. Johannes Meyer, Morris Plank, Max Jameson, Brandon Hawking, Catherine Irwin, Albert Werner, and Marek Pliskov. No one's ever heard of these people before.
Wow. So, but they sound German. I mean, that's legit, right?
Yeah, and so these are most likely pseudonyms, which, why not? Satoshi Nakamoto is a pseudonym too. It's not clear that they're pseudonyms. They are presented as if they're real people, and yet no one's heard of them in the crypto community. And so it kind of makes sense. I mean, that's not a red flag in itself. I mean, if you're making an anonymous coin, then keeping the developers anonymous or pseudonymous would make sense. Here's where the interesting thing comes in. So the user who did this analysis looked at the two white papers published, V1 and V2. One of the claims made by the authors was that this technology was 2 years in the making. And to validate that claim, they presented two white papers, V1 of the paper 2 years old and V2 of the paper slightly more recent. The poster on Bitcoin Talk did an analysis of the PDF and makes a pretty compelling argument that both of the PDFs had their dates forged. And that in fact, whereas the PDFs claim to be 2 years old, they appear to have been constructed not only much more recently, but that V2 was written before V1. So V1 has some references, citations at the bottom of papers that actually weren't out at the time that V1 was supposedly published, and that are references and citations for things that are not in the paper, but only exist as quotes or references in the V2 paper. So it looks like copy-paste job that was done badly. The citations were not removed, were left in there from V2.
Oh,
and
boy.
V1 was created retroactively as an earlier version, and both of them were signed much later.
So, okay, it's one thing to fake dates on a white paper, and of course that's suspicious, and of course the names, nobody knows who these people are. I even saw an allegation on the Bitcoin Talk forum that they could be extraterrestrials, which is, I guess that shows the level to which this is going. But so it's one thing to fake timestamps on documents, but they also faked something in the Bitcoin blockchain too. Is that right? And there was some kind of financial benefit from that.
Right. So the Bitcoin blockchain essentially is pre-mined, and that pre-mining has fake dates in it as well, apparently. So it now appears that both of these things really came out in March and April of 2014 and were created contemporaneously, and so was the initial pre-mined blockchain of Bitcoin.
And when they had claimed that it had been like 2 years in the making, it was actually like 2 months in the making.
Yeah, exactly.
Okay.
On top of that, and so there's essentially 2 years of fake mining with 82% of the Bitcoin coin pre-mined with this fake pre-mining of 2 years with all of the timestamps fake. That's the allegation. Wow. On top of that, the secondary allegation, if you like, is that the other 7 coins that were created as forks of cryptonote that make it look that people are very interested in the cryptonote foundation and reference implementation and are implementing it in all kinds of different coins, were all in fact created by the very same creators of cryptonote and Bitcoin. They share all of the same hosting infrastructure. They have the same DNS providers, the same web providers, the same Whois providers, the same registrars rather. And so it appears.
Wow. How did someone think they could put this past these conspiracy theorists, libertarian people? Who thought they could get away with this? I mean, a lot of research to do to find out the truth, but somebody's going to do that, right?
Oh, yeah. I mean, in this community, there's plenty of people with too much time on their hands willing to solve puzzles, and they'll make conspiracy.
And I mean that in the most complimentary way. When I'm calling these people conspiracy theorists,
it's awesome.
It's great.
Right. You get this incredible level of fact checking, which at times verges on the ridiculous in terms of conspiracy theories. I'll make an announcement about something that's factually true.
It's only a conspiracy if you're wrong.
Right. Well, no, I mean, I've seen times when I'll make an announcement about something and people will spin these very elaborate conspiracy theories that have no basis in truth. And that's annoying.
What's the best one that you've heard? Like, Andreas is actually an extraterrestrial, an AI.
I have heard the Andreas is Satoshi, which is patently ridiculous. I am nowhere near that smart and or skilled, so forget that. But no, I mean, I've heard you hear all kinds of different things. The thing is, in this particular case, this is exactly the kind of scrutiny you want. The evidence around the faking of the dates in the PDF is pretty compelling. That's something of a concern. Here's the problem, though. Even with all of this, the cryptonote implementation is still a compelling and interesting implementation of anonymity features validated independently by a whole bunch of really smart cryptographers. So you've got a good platform. From that, you seem to have a couple of scam coins being spun out that were pre-mined and a whole bunch of other scam coins being spun out that were intended really to make it look like there was a lot more activity, together with a whole bunch of sock puppet social media accounts used to make it look like there's a whole big community and a lot of development going on. And then within all of this, you've got one coin, Monero XMR, which is a clone of CryptoCoin, but which in a surprising move, I guess, was taken over by a community of followers. So it was developed by someone originally. I'm not sure who. I think it was, again, one of the anonymous or pseudonymous creators of CryptoNote, perhaps. But then it developed a community around it, and the community kind of did a hostile takeover, if you like, or a friendly takeover of the development effort. and built a real community. And Monero actually became very, very popular compared to the other cryptonote coins and has a fiercely independent community. Or does it? Because the second posting on Bitcoin Talk from August 25th, 10 days later, actually says that Monero is also a scam, that all of the community in Monero are a bunch of sock puppets and trolls, and provides a whole bunch of more proof about that, supposedly.
God. You read this, reading this forum, I mean, like, it's a full-time job to read this stuff. I don't understand how people have the time to fact check. I mean, bless them. It's great that they have the time to connect the dots and, you know, put together the evidence on these things. But God, it's just so much effort to keep up with all this stuff. How do you know what's real in an efficient way?
Well, yeah, exactly. Right now, I have no idea what's real. What I've seen is there's, I think, one of the things that seems to be pretty clear is that some of the signatures, or rather some of the dates on the PDFs for cryptonote were faked. But even that, I can't really tell for sure. So the evidence seems compelling. I've looked at the PDFs myself, and it seems to have these little, what I call them, footprints that indicate something fishy was going on there. But all of the rest of it, who's a sock puppet and who's not, who has a fake community and who's not, what's being pre-mined and what's not, who has real developers behind them doing real work and who doesn't, I really don't know anymore. It's all so confusing. And so I would love to hear feedback from our audience to try to help us understand this because, you know, again, I'll go back to the original premise. It appears that cryptonote has some very interesting anonymity features. And despite all of this, you know, bullshit that's going on in terms of pre-mining and scam coins and fake communities and really, really aggressive trolling back and forth between these various communities, the bottom line is that there's some good technology here, and it would be really a shame if it went to waste because of all of this bullshit.
Well, now here's where I get conspiratorial. I mean, is it possible that this is all just a ploy to, like, distract people from the actual important information in here, which is that there is a good technology that could be useful?
Why not? It wouldn't be the first time that organizations run disinformation campaigns. There are professional companies that you can hire as either a large corporation or a state actor, or you can run them yourself. But there's certainly companies that will do that will build hundreds and hundreds of sock puppet accounts and do a mass campaign of disinformation, discredit proponents of a certain technology, glorify opponents, feed disinformation, create disruption. And in many cases, you know, there is no point to it. It's all just to muddy the waters and put enough trolling in there until no one can discern what's actually happening. In my opinion, most of the Reddit, the Bitcoin subreddit, is absolutely full of that.
And right? The Bitcoin forum, I mean, yeah, I'm not the only one to say that either, neither are you.
Right. I've arrived at the conclusion that there is not a single public person in Bitcoin, a well-known person in Bitcoin, who has not been not only thoroughly smeared, but also who doesn't have recurring conspiracy theory narratives attached to every post they make. So no one escapes this. I wouldn't say a victim of it, but I've been subjected to it. Every single one of the core developers has been subjected to it. Every single one of the major investors or owners in one of the well-known companies in Bitcoin has been subjected to it. Every single creator of every altcoin. If you go through and look at Reddit and Bitcoin Talk, not only do they get trolled to death, but there are specific narratives. And as soon as one of these people posts something or their name is mentioned in a post, out comes the trolling narrative to smear them. I don't think that's a coincidence. Either we have the most viciously nasty community in the world, or there are some people actively trying to create discord. Maybe it's both.
What else do we say about that topic? I mean, I think that's a good place to end off. Should we go into talking about not from the online community, but the in-person Bitcoin community and talking about Bitcoin conferences?
Yeah, that would be great.
You can get really, oh boy, I agree with you when you said that there's just so much trolling and disinformation that's obviously going on online. And it's been cited as one of the reasons that perhaps women tend to avoid these places online or just avoid revealing that they're women. I don't personally use them, Reddit r/Bitcoin or the Bitcoin forum. I'm sure I've been trolled in my absence, but whatever. I've got a life and I would rather live it outside of those things. But yeah, in the in-person world, I'm sure there's some of that goes on as well, but it's a little bit harder to hide behind a screen and just do some of these overt tactics. When you're actually at a Bitcoin conference with people, then you're meeting people face to face, right? I had a friend say to me the other day, I don't think Bitcoin is in a bubble, but I think Bitcoin conferences are in a bubble. And I mean, there's a lot of truth to that. There have just been so many conferences over the past year. We've talked about it a lot on the show. I think all three of us, you, me, and Adam, have expressed on the show that at times we feel a little bit burned out on the number of Bitcoin conferences, and we want to be there and we like to be there and we like to actually network in person with people, but they get to a certain point where it's hard to get work done because there's just so much travel and so many Bitcoin conferences happening.
So far, in 2014, I was invited to speak at 48 different conferences to speak about Bitcoin.
Wow.
I turned down 42 of them because of a lack of time, obviously. And here's the interesting thing. A year and a half ago, we all went to the first major conference organized by the foundation, April 2013, San Jose, California. And at the time, there was one conference. I think it was the second one organized by the foundation, but it was the first one that got a real crowd.
And that wasn't too long ago. That was a little more, that was like a year and a half ago. Not even. 18
months later, there's a conference every single week somewhere in the world about Bitcoin. Yeah. Here's the interesting thing. I think we're now moving to the second stage, which is really interesting to me, which is not conferences by Bitcoin, of Bitcoin, for Bitcoin, and about Bitcoin, but the presence of Bitcoin topics in conferences outside of Bitcoin. Whether that's South by Southwest, whether it's TED, whether it's Money 2020, or other conferences in an even broader space. I'll be speaking at the Cybercrime Symposium in 2014, coming up in November in New Hampshire. That is a conference outside of Bitcoin. It's about electronic and digital cybersecurity and cybercrime with an emphasis on financial, healthcare, and defense. And Bitcoin is just one of a broad range of topics. And now suddenly we're talking about Bitcoin security in a mainstream security conference. I'm very interested in participating in those types of conferences. And I think that's a very big part of Bitcoin growing up.
I agree with you there. Sort of getting out of the bubble or getting out of the insular kind of community of true believers and reaching out outside of that community to other people who haven't really heard about Bitcoin yet, or maybe they're just hearing about it for the first time. What we're seeing now is there's a few, obviously, major companies in Bitcoin like BitPay and Coinbase that are starting to sponsor these major events. BitPay is sponsoring the Money 2020 conference. The biggest sponsor. Did that already happen, or?
No, it's coming up. For the next one.
They are like a major sponsor of that conference, right?
So that's the November 2nd to November 5th, 2014 at the Aria Las Vegas, Money 2020, 6,500 attendees. And in the 2014 sponsors, platinum sponsors, 5-star sponsors, Accenture, American Express, Bank of America, BitPay are listed as the first four, but from what I read in some Bitcoin-related news, BitPay was the largest sponsor in this particular event.
Yeah, thanks for having the details there, Andreas. I appreciate that. But that's very interesting. We've also seen BitPay sponsor this big, was it the big sporting event? I don't even know the name of it.
Well, don't ask me. I have no idea, but
in Florida, there was some bowl.
Pretty sure it involved balls. Yeah, so we're seeing these mainstream conferences now having Bitcoin as a topic. 2 years ago, South by Southwest.
That's what it was.
Oh, there we go, yeah.
The St. Petersburg Bowl, which is what even sport is this? It looks like a football game, but don't quote me on that. Anyway, go ahead.
Yeah, the other one is South by Southwest. 2 years ago, not a single mention of Bitcoin. This past South by Southwest, it was a couple of months ago, I guess, Bitcoin had a huge presence. It was talked about throughout the conference. There were a couple of big presentations. In the next South by Southwest now, in March of 2015, there's already a number of people working on broad-ranging proposals for a range of Bitcoin topics. And I'm hoping to speak there as well. I'm really focused for the next 12 months doing as many mainstream conferences with a Bitcoin topic rather than Bitcoin conferences and bringing Bitcoin to a much more mainstream audience. My personal experience with that was really started with a Joe Rogan experience, the podcast show with Joe Rogan. Yeah. You know, Joe had no idea what Bitcoin was. And he invited me. I did that twice. I'm hoping to go again. But it was so amazing to see what happens when you bring this topic in easily understandable terms to a mainstream audience. Thousands and thousands of people joined the community because of that one podcast. And we can do that, you know, times 10 in the next 12 months. So I really think 2015 and the end of 2014 will really be the year of Bitcoin as a topic in mainstream conferences. Maybe that means the Bitcoin conference itself.
I'm with you there, Andreas. I mean, I kind of came to the same conclusion early 2014 when I gave a talk about Bitcoin to an audience that didn't really know much about Bitcoin. It just seemed like way more of a useful and efficient use of my time than to be kind of preaching to the choir at these Bitcoin conferences. And to be honest, I don't have a Bitcoin company. I don't really do anything special in Bitcoin. I'm just kind of a commentator. And I mean, I have my own business and I use Bitcoin in my business as a voice actor, but I'm not like on the bleeding edge of Bitcoin technology that I can really be talking to these crowds. But I can definitely explain Bitcoin to people who are beginners for sure. And so that's what I've kind of decided to do. And it sounds like you have too.
Yeah, I see my role more as a Bitcoin ambassador to mainstream audiences. And I've done a couple of things related to that. But certainly that's going to be my focus for the end of 2014 and 2015. That doesn't mean I'm not going to be doing the Bitcoin conferences themselves. I think a lot of them, especially the ones that are community driven, are very interesting, and they provide a great opportunity to meet up with many of my friends in the community and see many of the people I know in the space. But, you know, for next year, I'm making a big push to do TED, if I can, perhaps TEDx and TED-Ed type conferences, South by Southwest and mainstream IT, security, and networking conferences. So bringing that to a much broader audience. And then the other one that I think is really interesting is the growth of the college campus networks. So especially with initiatives like CCN, the Crypto College Network. And that's an association of campus-based student organizations focused on Bitcoin. And CCN has been growing really, really fast. I think there's a tremendous opportunity there to go to student organizations and audiences that are mainstream, not necessarily computer science, but cross-discipline, computer science, finance, law, business administration, entrepreneurial students, and go and talk about Bitcoin as a career choice, as an industry, and bring Bitcoin to an entirely new audience of young people.
Do you ever feel like within the Bitcoin conferences, it gets a little bit competitive? I don't know, like I get this vibe of like everyone's kind of trying to one up each other. Like I'm on the forefront. No, I'm on the forefront. I just got this much funding. No, I got this much funding. You know, that's kind of the environment that I think puts a lot of pressure on people. I recently saw this post on Reddit from Jason King, even though I just said I don't use Reddit, but I came across it because a lot of people shared it because I think it resonated with a lot of people, where he said basically some prominent people in the Bitcoin world have gotten in touch with them and said that they were contemplating suicide because there was just so much pressure in this world to be the best and to get more funding and to have the biggest business, and it just all gets to be too much.
Step away from the keyboard if that's how you feel about this industry. It's not worth it at all. But here's the interesting thing. I think to play out that thought, if really the mainstream companies in Bitcoin are trying to outplay each other and out-sponsor each other and make big splashy announcements, maybe this is the time when we should see more Bitcoin conferences with, guess what, lower ticket fees. I mean, come on, you can't be charging $500 to go to a Bitcoin conference when you have 15 platinum sponsors. That is greed. If we're going to bring Bitcoin to a broader audience and allow people who aren't in Bitcoin or people who are in Bitcoin and are new or looking to do it as a career, are students or are currently unemployed, you can't expect people to pony up $500 when you're already making tens of thousands of dollars from sponsors. So I'm hoping we'll see a bit more competition to lower prices for Bitcoin events so that more people can attend. Because really, some of these events are horribly expensive. And if all of these companies are sponsoring and trying to make big splashy announcements, well, they can pick up a bigger part of the tab.
Yeah, I think there have been a lot of people who have entered the Bitcoin conference space recently who have never really organized conferences before. They just kind of saw an opportunity and said, yeah, let's organize a conference. How hard could it be, right? But then they encounter all these organizational issues, of course, as anyone who's trying to put together an event like that does. And so now with the specialization of Bitcoin conferences, with them becoming a little bit more niche and specific, I share your hope that we will see some more community-focused, more affordable types of events.
I'd like to add to that the idea of more focused Bitcoin events. We've seen really Bitcoin go into three different directions. You have people like Jason King organizing conferences that are focused primarily on the charity, non-governmental organizations, and nonprofit organizations. So Bitcoin for charity and nonprofits. I think that's a great direction to specialize in. We're also seeing a number of conferences that are focused on the investor side. So they're conferences that have a lot of presence by banking organizations, investors, and VCs. You can easily see which ones those are. Neither I nor Stephanie will be appearing there. Lots of suits, not too many ponytails. I think the third class of conferences that we really need to see some specialization, and I'm hoping we see that a lot more in 2014 and 2015, is conferences focused on software development. So cryptocurrency software development, conferences with developers, with workshops, with an emphasis on software engineering, code development, workshops, hackathons, job opportunities, combined perhaps with job fairs. We've seen a lot of success with a job fair in Sunnyvale that happened 5 months ago or 4 months ago, and then we're going to see more of those happening. There's another one happening in New York, I believe, in a couple of weeks. And I'd like to see cryptocurrency conferences focused on developers and the career choices they're making in terms of specializing in the software of cryptocurrencies. And those I will go to.
Thanks for listening to this episode of Let's Talk Bitcoin. Content for today's show is provided by Andreas M. Antonopoulos and Stephanie Murphy. This episode was edited by Adam B. Levine, and music was provided by Jared Rubens and General Fuzz. See you next time.